Bitcoin has had a phenomenal run in recent weeks, but it's really important to understand some of the reasons why it's not really a good time to be buying Bitcoin at these highs. And I'm going to share 3 reasons with you in this video. So stay tuned for some level-headed insights based on TA. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. And let's dive right into it. So if we're focusing on this structure right over here, this is a black downtrending channel, and whenever we see price drop into the orange region, so below the channel, those are bargain buying opportunities. Whenever we see price upside wick into the top of the channel and beyond it into that red region, those tend to be FOMO wicks, and those tend to be regions of rejection where we tend to see price simply retrace from the top of the channel into the bottom of it, and maybe even overextend with a downside deviation into this orange region. And notice how the first rejection right over here, that was 17% from channel top to channel bottom right over here, and then we recovered before rejecting once again for the second time for a 22% move into the bargain buying region before rebounding once again to the upside, and then again rejecting into a 25% correction, and then into a 29% correction once we rebounded from here and rejected from here, and that was a 29% correction. So notice how we're getting progressively deeper and deeper and deeper rejections from the channel top. But this won't last forever. And this is the very first chance that Bitcoin has to prove to us that this downtrending channel top is weakening as a point of rejection. So this is the first chance that Bitcoin has to show us that the tide is shifting, it's turning, and this resistance is weakening. So with a pullback now of 3 to 5% right now, it's already a shallower rejection based on the 29% pullback. But of course, this could technically go deeper, and it's probably going to be a shallower retrace compared to 29%. And that's the whole point of this rejection. It's to show us that this is a weakening resistance and that we might see a pullback, but it's not going to be as deep as in the past. We need to see this resistance get weaker. So buying right now is buying at the top of the channel where historically FOMO buyers have been trapped via this upside wick. So it would be better to wait for a pullback before buying into the market. That's one of the first reasons. But of course, the second reason is, if you think about this downtrending channel, we need to talk about the tweets that I mentioned a few weeks ago. And the second reason for not buying right now is to be buying, in fact, when pullbacks are occurring. Back here in this tweet, we had 2 weeks of downside, retesting for 2 weeks in a row this July downtrend. And when the fear is there and the pessimism is there, that's when you should be buying, especially when we have technical analysis showcasing to us that this is a retest here and that the August highs are weakening. So in the following tweet, we actually got a rebound, from here. Fantastic rebound, showcasing that the August highs were indeed weakening, and indeed, we saw price really reverse towards the upside with scope for rebounding into the red downtrending channel top, which is what we actually got in the end. But then again, we have to watch out for these upside wicks because that's where we tend to reject from. And indeed, that's exactly where we've rejected from. So right now, we're probably going to have to contend with a potential pullback. And of course, this 21-week EMA here, this green bull market exponential moving average, that tends to be a good support, especially in recent weeks. So holding above there is pretty much really important for Bitcoin. Of course, we can get downside wicks here, volatile retests of this 21-week EMA. So pulling back into this 21-week EMA, maybe even downside volatility there, what would that give us in terms of percentage depth on this pullback? It would definitely be shallower than the previous 25 to 29% pullbacks. And maybe even worst case scenario, we get into the channel bottom again. That's always going to be a possibility if we're zigzagging from channel top to channel bottom to channel top. But at some point, this tendency is simply going to change. And if we do pull back into the 21-week EMA, maybe even overextend below it, then that's going to be a shallower retrace altogether. But generally speaking, we are sandwiched in this range right over here. So we are maybe going to be consolidating from the top of this range to the bottom of it, downside volatility maybe. But this is a brief sideways range here. We're going to try and keep these August highs as a support. That's something that Bitcoin failed to do 2 weeks ago. Maybe it's going to try and do that successfully this time around. Generally, the consensus here is that we're going to see a shallower retrace. And so it's important to let that retrace essentially take place. Because if we're considering this reaccumulation range overall, the third reason would be to watch out for confirmation. And this is what I mentioned in a tweet from essentially earlier today, actually, that we were pressing beyond this downtrend here, this lower series of lower highs dating to essentially mid-March. We need to weekly close beyond this downtrend to enable a move to revisit the range high of 71,500. And this is the reaccumulation range that we're currently in. So we need confirmation in the form of a weekly close followed by a retest of this downtrend to get us to the top here. So buying here is dangerous because we don't have that confirmation, and this is exactly what happens when you don't have that confirmation. The same thing that has happened in the past at this same diagonal resistance. So upside wicking beyond this diagonal resistance, that's exactly what you don't want to be seeing and buying into. Really important to get that confirmation. So that's one of the other reasons not to be buying. You have to wait for confirmation. So the best places to be buying Bitcoin is either to weekly close, wait for a weekly close above this downtrend, have it retested, and that's going to enable expansion towards the range high here for a potential breakout into the parabolic phase of the cycle. Or if we're going to get a deeper pullback, that's probably going to get us into the 21-week EMA, get us maybe this sort of volatile retest maybe. If we're lucky, we get back into the range low of 60,600. Maybe we get that downside volatility. My main point here is that we need to wait for confirmation or lower prices. You don't want to be buying once price has really rallied quite significantly. So it's either buying on confirmation, where we essentially see this sort of pathway play out in the future. So weekly close, retest, maybe if we get a rejection from this range high, that would showcase to us as well that this range high is weakening, because remember, range high rejections have seen us go into the low 50s, whereas if the next time we get there and we reject in a shallower manner, that's going to enable a retest of this downtrend, and that's going to showcase to us that this range high is also weakening as resistance, which is going to enable a future easier breakout in the future and see us transition into the parabolic phase of the cycle. But of course, we're not quite there yet. It is early on in the week, so a weekly close above here, that's going to give us that confirmation, in which case that would actually warrant a potential buy from my side to be buying on the confirmed trend shift here. But you don't want to be buying into this upside wick before we have that confirmation, because you end up as a FOMO buyer in this regard, just like we saw in the past here. So really important to only have that confirmation or be buying in periods of really seeing pullbacks, deeper pullbacks, 2 weekly red candles in a row, for example, into the lower 60s or higher 50s. Buying essentially when we have maximum fear and pessimism, but not buying into a rally that hasn't necessarily confirmed trend continuation. So if we're looking at the reaccumulation range here, then we need to break this diagonal to rally to the top of that reaccumulation range. But until then we're going to be sandwiched between this range low of 60,600 and the diagonal black resistance until we finally confirm the trend. And in terms of optimal bargain buying opportunities, this is actually something I mentioned in late June, where any sort of downside deviation below the range low here, so essentially those sort of orange circled moments, those are downside deviations below the reaccumulation range low, and those make for optimal buy side opportunities, because that's where people are capitulating, bargain buyers are buying, and most people don't want to really be buying in those regions because they expect that price is going to simply crash to lower levels. So those are the optimal bargain buying opportunities, rather than looking to be buying into a trend that has really accelerated already and is rejecting at key levels that it should be treating as support instead of resistance. So my thought here is to wait for confirmation instead of buying and FOMOing without understanding the key levels. It's really important to potentially wait for a pullback for us to finally know that this is a shallower retrace, that this is weakening as a resistance. So on a pullback, once the sellers have been flushed out of the market, that's a better opportunity to be jumping into the trend rather than instead FOMOing without a plan and just giving into those emotions. And technical analysis helps you give parameters on what's going on in the market. So those are some of the reasons why not to be buying Bitcoin right now. But overall, the whole thing that I want to point out before we finish the video is that we're in a reaccumulation phase, and the reaccumulation phase is going to enable the parabolic phase. So the parabolic phase is going to take place in the future. So effectively, if you are looking at this on a week by week basis, then maybe this video is something worth watching. But if you're thinking about the next several months, then this video is still worth watching. But if you have a broader time horizon, then it actually doesn't really matter whether you're buying at 65, 64, 66, 67, 63 or 62, because overall, these are going to be great prices in the next several months. But if you want to get the best and optimal buy orders in preparation for the parabolic phase of the cycle, it's a bit of a shame to be buying at 66, 67 when we've seen so many moments where we can get in the low 60s, for example. So if your time horizon is for the next several months, then anything within this range is surely going to have a return on investment in the future. And that's simply what we're waiting for. We're waiting for that transition from the post-halving reaccumulation phase to get us into the post-halving parabolic upside phase of the cycle. And until we get that confirmation of breaking this downtrend, and until we get that confirmation of breaking the range high reaccumulation of the reaccumulation range, until we get confirmation on both of those resistances breaking, then any sort of rejection and pullback that we see from there is always worth waiting for. From my perspective, I'm dollar cost averaging into deeper pullbacks, getting closer into the 60,600 region. Any sort of downside deviation below there is of interest to me personally. So that's how I'm treating it. I don't want to be essentially buying at the top of the range, rather looking at the bottom of the range and any deviations below there. So those were the reasons to not necessarily be buying in right now to Bitcoin, but waiting for the opportunity to come to you rather than you jumping at the opportunity once a trend has already evolved and a lot of the upside might have occurred already. And also jumping in without confirmation. Confirmation is super important, and confirmation is something that I talk about in the Rekt Capital newsletter. It's something that could truly benefit you. So feel free to sign up for free by clicking in the link in the description down below. Sign up to the free Rekt Capital newsletter for more insights like this in the future. And of course, subscribe to this channel for more videos like this in the future. Like this video if you enjoy content like this going forward. That's about it for today's video. Thanks so much for tuning in and watching. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.